Hello and welcome to Jazz After Dark. How you doing out there? It is truly dark here tonight. It is almost 1 o'clock in the morning. I love the nighttime, man. The nighttime is my favorite time. We're going to continue tonight with a discussion about growth versus value stocks. But we'll be doing our samples here from Flaviar. We do pay for this membership, by the way. This is not like a sponsorship or anything. I just think it's cool. You get a little sample of something that you would otherwise probably not buy, and you get to taste it, see if you like it. We're going to be trying tonight Wyoming whiskey. Oh, we've had this before. Yeah, I've had this before. Wyoming whiskey. I might have ordered this twice, actually. Supposedly going to get some butter, some floral in there, a little caramel, of course, in your whiskeys. That's always good. So grab a drink. If you're still awake, hang out with me. Growth versus value stock. Actually, there's not a whole lot going on there. I get a lot of floral, by the way. Whoa, that might be the most, and it says it's the second most powerful smell. Whoa, that's like you're breathing into a flower. Not that that's bad, but whoa. Okay, that is the most unique one that I've had. I guess I haven't had this before. Um, that's like if you mix remember as a kid, you had those little flowers and you would pull the stem out and you put it in your mouth. Was I the only one? You'd put it in your mouth and it was like almost sweet, but the flower smelled like something. I forget what those were called. That is interesting. Definitely the most unique that I've had. I'll have to do a little research on this one. Floral. What is that? Like citrus caramel or something? Anyways, wow, that is actually very unique. I did not see that coming. Anyways, now that we've gotten this thing started, growth versus value stocks. You know the difference? Right? So there's always an argument about this, and I find it really unique. I'm going to tell you exactly when the next time this is going to come up in the news because it's like clockwork. A growth stock is really a stock that presumably has tons of free cash flow or projected to have free cash flow there. And the stock itself, the company itself, is expected to grow more than its peers or grow more than the average stock, right? And so we're attracted to that because maybe growth-oriented investors want more aggressive returns. Is known for being more volatile, right? So you got to be able to handle that, and I'll share that with you in a second. But a somewhat recent example would be Salesforce, ticker symbol CRM. Not a recommendation. I'm just saying, Salesforce be a good example. And so then on the other side of things, value stocks would be. Let's maybe just dive into this. We'll dive into it here in a second. Actually, value stocks would be a company that, for whatever reason, and that's the trick part of this thing, but for whatever reason is undervalued relative to its peers. In other words, for example, Kroger right now is considered a value stock. Compared to the other grocery stores, it's trading cheaper on a forward earnings basis than most of its peers. But there may be a reason for that. We don't know. So you value investors look at that and say, I'm getting a discount on a company. Picture the guys at Shark Tank. A guy comes in with a really cool invention or some product, but he's undervaluing his company because maybe he wants the sharks' help or something. So the sharks look at that and say, well, we're getting a good value for a product that is probably worth more, but for whatever reason, it's undervalued. And you'll see them. They'll sort of like pick on the guy, like, tell me about your debt. How much did you put into this? Do you have any other investors? They start asking questions to peel that onion back. It's the same thing in the stock market. Kroger, undervalued at the moment, considered a value stock. But why? We have questions, right? And so investors have always argued one side is better than the other. Growth investors say, how can you beat us, right? Value stocks are discounted for a reason, right? They're undervalued for a reason. And value investors say, that's the only way to make money. If you invest in value, then you participate in what would hopefully be a company that can continue to grow and maybe turn into a growth stock or just turn into a good performing stock. I would rather buy the discount than pay for growth. Whatever you feel is, your own argument. My question is one better than the other, right? There's no argument. This is, this is going to probably not shock a lot of you. There's no argument here. So what I did is I did not pick favorites. I didn't use an ETF. I didn't use a mutual fund. I used the actual index of growth versus value. Well, it's an index in this case. And so what we're plotting here is in blue, we're showing the growth stocks as an index. And then in black, we're showing the value stocks. All right. So at the moment, value stocks are performing less than growth stocks, just at the moment, 6% versus 12%. However, let's look a little bit further. What is the long-term average here? 11.77% versus 11.62%. They're essentially the same. And you can shorten this and stretch it out however you want. The average is basically going to be about the same. Now, the growth stocks, you're going to see more volatility. You can kind of see it here. See that blue line, more volatility, and then all the way back down, right? And then all the way back up, and you get the idea. If we plot that, I'm actually marking the high of the range and the low of the range. So a range of plus 32% going back many, 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 many years, and a low of minus, you can see it right down there, minus 11.28%. So you have over a 40% range that you had to handle in order to make 11.77%. On the other side of things, value investors, this is one of their arguments, they say, well, here's from 30% to minus 6.5%. So here you have your 40% plus range. I've got my you've got your 35, 36% range. So they're arguing that for less volatility, I can get about the same return, fraction of a difference there, right? And that really depends on you. I mean, if you can handle the volatility, that's great. Now, here's where you see this in the news. It's at extremes, right? So, for example, I'll go back a slide here. If you recall, what was it, 2019 going into 2020, the whole growth stock area of things, people were like, oh my God, value stocks will never beat us. It's because the pricing, the returns, was at an extreme. So whenever you see an extreme, that's when you're going to see talk of one side over the other. This is true with anything, right? If Republicans are beating Democrats, they're out there hooting and hollering and everything. Democrats win the White House, they're like, haha, you suck, right? Whenever your team is doing better in sports, politics, investing, hedge funds, whatever, well, of course, you know what I mean? It's American. You go out there and you say, I got this, you're all excited. And so this is not the best way to show this, but one of the ways you can track this is just simply plotting them both together. So for example, when this line is moving up, then growth stocks are beating value stocks, and by a wider and wider margin, right? When the line is going down, value stocks are beating growth stocks by a wider and wider margin. So right now, we don't have an extreme. You notice how there's no talk on TV about that? You don't have CNBC, where we've got the growth stock investor and the legendary value stock investor, and we're going to pit them against each other. They have nothing to say because they know the numbers. Right? So they're looking at the same thing going, yeah, you got me a little bit at the moment. One's beating the other. But there's no argument. When we have these extremes, or if you want to use a chart like this, wide spreads between one and the other, as they spread, you're going to have people arguing. It's kind of like, what's her name? Kathy Woods. Ooh, when she was doing really, really well, buying these no earnings growth stocks, well, of course, talk to her nonstop. Well, things are a little tougher now for her. So now she's not on as much. Now she's playing defense. She's trying to come up with that next greatest idea, right? Value stocks, value investors and growth investors, they're the same thing. It's just a strategy and a way that they want to look at that. So all I wanted to share with you tonight was, in the long term, there's really no argument. There are moments, just like anything else, where people do better. It's like my Cowboys, right? The 90s were awesome. We're doing this thing now, right? We're not as bad as we used to be, but we're coming back. There was an extreme, win multiple Super Bowls in a row, lots of MVP players. Oh my God, it's great. Tiger Woods, another example. It can't go on forever. There's an extreme. And then, if you're a Cowboys fan, you know what I'm talking about. Anyways, um, very interesting. Wyoming whiskey. I'm going to save a little bit of this here to let the missus try because she likes the floral stuff. She likes the floral gins and whatnot. And that was really unique. So I would suggest if you're into florals with a hint of like citrus, or tell me what I'm missing here, something there, you might like that. You might like that. All right. Hope you enjoyed. Hope you learned something. Back to work I go. Enjoy the rest of your evening. Thanks for watching.